Okay, so this week I'm going to give you my feedback on a lot of the numbers and what I think the market's doing based on the numbers that we see from Comfort Report, as well as just some stuff behind the scenes that we see at Capstone. As a company who currently manages over 650 units here in the Valley, we'll sell right now. We've got like five in escrow. We have five more behind it. I think realistically, we do enough volume now to be able to see this small little snapshot of what's really happening in the market. And it might not be at every price point. It might not be in every market, but from a 10,000 foot view, when I'm talking to a member like Yaz, when it comes to leasing, and ask her and look at the metrics to see, hey, what's happening, what's not happening, what's changed. I think her perspective and the perspective of the team and their respective fields and roles is helpful because they see something at such a consistency that it helps in understanding what does it look like when there's volume, right? And when we can have this many at bats, what does that really look like? So for what it's worth, I'm going to share some of that as well. So let's get into it for a minute. Uh, Looking at the active listing counts, what ended up happening, a few months ago was right here in May, we saw that people were hopeful in putting their houses on the market for sale. And this is active listing counts for sale. This ties into leasing. This ties into management. It all comes together, right? So when looking at these numbers, we had there's got to be a big enough reason for somebody to want to sell. When the market collapsed the last time, people were selling their houses based on fear. They couldn't hold their properties anymore. They lost their jobs. Whatever that might have been, or the rates changed on their mortgage and they could no longer afford them, right? So the houses had to go back to the bank. Now, what's happening in the market is a lot of owners have control of that because their interest rates are locked in so low that the option to sell is not there. And the option for a while looked like it was there. They were riding this market up, thinking that it might be the time to push the value and do what they could. And then right around this time of the year, right around May, you saw a lot of sellers go, oh shoot, looks like we missed it. Time to get off that and thinking that we're going to push the value higher and let's just rent it or let's move back into it or whatever they're doing with it, right? So now what we're seeing is a lot more sellers on the market that are in a position where they have to sell. And that's where buyers are then taking advantage of this market and getting maybe better deals, or even if they can get 4 to 5% off of list value or retail price, they're still beating the market because at the end of the day, we haven't seen a huge decline. We haven't seen a decline. It's still growing at like 1%. But it just seems so insignificant compared to what we've seen in the past that we're seeing more of a normalized market. When you look at year over year percentage change in supply, right now we're at 35% over where we were last year. So last year supply was at 16,000. Now we're at 21,000. Again, look at this peak and where we were at 24,000 in April. Year over year percent change back then was 54%. So we have come down. And I think, again, it's showing that sellers who don't have to sell right now are opting not to and looking at alternatives, whereas buyers who are in the market may be able to find those better deals. Average days on market for sale of course, they've gone up. The buyers haven't changed, and the sellers, although we're seeing less inventory than we had, we're seeing fewer under contract than we were even a couple of months ago. So that's slowed down a lot. Sale price to list price. So this is a good one because this is something, and I like looking at this one. And this one for sellers, for those of you that are hoping that the market is going to, like, we should price it and we expect that a buyer will come along and just offer us whatever they're going to. It doesn't happen as often as it used to. Now, 10 years ago, that was a solid play, right? It was a different market. But now we're not seeing buyers come in as aggressively because the properties that are selling, and again, this is going to be price specific, but when you think about a new home buyer that is looking for concessions, right? They need the seller to pay for their closing costs. We got an offer just yesterday that the buyer's asking for 6% in concessions, right? That's a lot for the seller to pay out of pocket. So now you're looking at this number here, and they're asking for 6% already. We ain't messing with the price if we're even going to consider it. You know what I mean? So that's something where we're staying relatively close to the list price by 3%. Um, let's see, percentage of closings with seller paid concessions, we're at 56%, which has gone up. So again, lower price point, we see more concessions paid. On every single property that we have sold this year that was under 450,000, every single one of them had seller paid concessions to the buyer in order to either buy down the rate or pay for their closing costs. But in most cases, it was enough to buy down their rate, because otherwise the buyers just would not have been able to afford it. This is an interesting one. Listings under contract. We're relatively similar to where we were last year. However, this year, people are recognizing that there's not an upside potential right now looking like it's going to happen in the market unless rates change. And right now, it's stalling a little bit to where, yep, we just need to, if somebody needs to sell their house right now, it has to do with pricing. And inventory is, again, coming down a little. However, buyers are not really shifting, because although interest rates did adjust a little bit this week positively in the right direction, not enough to make as much of an impact. When you look at this here for contract ratios, right now we're at, of the 22,900 that are currently active on the market, we got 7,000 that are under contract. You can see where we were back in the crazy days of 2021, just before things really shifted in 2022, and then has stayed relatively consistent since then. Average lease price per square foot. This is also an interesting one, which doesn't really tell the whole picture, because we're always looking at, hey, what is actually listed on the MLS when it comes to leasing? So this one I include on there, but take it with kind of a grain of salt. I don't know if there's not enough sample size in order to really tell you what the market's really doing. Under contract weekly average list price per square foot. This is also indicative of those higher price point properties coming off the market. They don't have to sell right now. Why are they going to? They've now come off the market, and as we're decreasing here, we're seeing different types of properties that are still currently going live and listed. Yeah, so you can check out the rest of these on our website. They are helpful. Listing success rate by calendar month. What's interesting is we're at 63% listing success rate right now. The last time we were less than that was, or let's say December of 2022, which was at 61%. That was a very, very tough market at the end of 2022. For those of you that were in it, you know what I mean. And that was, we took everything off the market, told sellers to just stop, because we thought that was a better alternative, seeing what's doing and how rates were changing so quickly. I hope this information helps. One of the things that Yaz brought up that was super important was the last 6 months on the leasing side, we've been seeing something different. And what we've been seeing is owners or tenants that have been applying to our properties have now been pinched by the student debt issue, where now the student debt is showing up on their credit reports. For those people that are getting displaced because maybe the owner of their investment property is deciding to sell, those people are now looking for new properties, and they have no idea that their credit has been affected negatively because of these student debt impacts. That's something that's real. That's happening right now. Last year at this time, for every 5 people we showed a property to, one of them got a lease done, right? 5 to 1. This year, 10 to 1. For every 10 people we show, one lease gets signed. That's a lot. That's changed a lot. That's doubled essentially from where we were last year. Well, of course, 5 to 1 to 10 to 1. But that's nuts. That it takes so much more to get these properties leased right now. And again, people are getting navigating through this system in a particular way that you know, may not be giving us all of the right information. However, it's still something that we've got to battle and doing our best to stay ahead of. Thanks for watching. Hope this was helpful. I love it. I know I went through a lot of the metrics. Hit me up if you want to see any of these graphs again, or you want to know where you can find them. Be more than happy to share. Thanks so much for watching.